Hello, welcome to LCG's look ahead to the key events in markets for the week starting March the 6th, 2017. So it's quite an amazing time in markets. As regular watchers will know, I haven't presented the week ahead in 3 weeks. And pretty much in that small space of time, the Dow Jones Industrial Average, or Wall Street as we trade it at LCG, has leaped 1,000 points from 20,000 to 21,000. Now, Donald Trump's tax and spending plans are still front and centre of optimism behind the leap in US stock markets, which is feeding through to other global indices. In fact, the FTSE 100, or UK 100 as traded with LCG, reached a fresh record high last week. Now, in our previous video, we highlighted the European election risk, but said taking a bearish view on stocks is risky when the uptrend has been so persistent. Now, that trading axiom, the trend is your friend, has never actually been truer in today's stock market. Last week, we also mentioned the surge in the price of gold this year. Now, we do still think that $1,300 per ounce is on the cards, but the big bearish candle on the weekly chart suggests a deeper pullback first. Now, European elections are drawing closer, and in particular, the French presidential race is drawing a lot of concern. The right-wing candidate François Fillon looks like he could step down as he faces an investigation for embezzlement of public funds. If he does, Alain Juppé, who was defeated by Fillon, may rejoin the race. Now, Fillon is such a weak candidate that many of his supporters on the right may be tempted to vote for Marine Le Pen. Were Juppé to return, then Le Pen would probably get a smaller share of the vote, possibly even not making it through the first round. Fillon stepping aside would be, in our opinion, positive for the euro and the France 40 index. In the UK, politics is set to take centre stage again next week. The final vote on the Brexit Bill will be on Tuesday, March the 7th. Now, an amendment suggested by the Lords vote to protect the rights of European citizens adds a little uncertainty, but we don't see the Prime Minister's March deadline for Article 50 at risk, so it should be sterling neutral. Now, there has been talk of rebel Tories voting to force the government to give MPs and peers a meaningful vote on the outcome of negotiations with Brussels. Now, this is unlikely, but were it to happen, it would make a hard Brexit much less likely and should be positive for the British pound. It's also the UK budget next week. Unless an overly austere budget is announced, which would impair UK economic growth, it should mostly affect individual sectors of the stock market. Which ones to watch? Well, watch home builders and insurers, as pensions and stamp duty changes are expected. On the economic data front, it's all about the ECB, non-farm payrolls and Chinese data. China's economy has been doing well of late, propped by government stimulus, so we don't expect any big fallout. The most interesting stat is China's foreign exchange reserves, which are reported on Monday because they give a clue on how much intervention there has been from the People's Bank of China in order to prop up the Chinese yuan. The ECB is not expected to make any changes to interest rates or its bond buying purchasing program in March. It will be interesting to see how ECB President Mario Draghi defends keeping monetary policy so loose when Eurozone inflation for February hit 2% year over year, meeting the European Central Bank's policy objective for the first time since 2013. Now, the euro-dollar is flirting with the 105 mark, a price floor that has been holding since the start of the year. If 105 gives way, there's a strong chance of a breakdown below last year's lows. Non-farm payrolls are on Friday, and what's expected is 185,000 jobs to have been created in February, down slightly from the 227,000 in January. Now, it's the last big data point before the Fed's March meeting, and the market is currently pricing a March rate hike at 88%, so it will take a pretty disappointing number to undo the bullish trend in the US dollar. Now, there is always a lot of volatility when the data is released, but we'd expect anything over 150,000 to be ultimately good for the dollar-yen, and of course bad for gold. Now, that's it for LCG's week ahead today. Thanks so very much for watching. Don't forget to connect with us on social media and subscribe to our YouTube channel so you can see our videos as and when they come out. Good luck trading. Goodbye for now.